All right, welcome to today's Explainer. We're diving into Schneider Electric's frankly jaw-dropping first half 2026 earnings. While everyone else is out there obsessing over the latest chatbots and software updates, we're taking a step back to look at the foundational layer. Who is actually powering the physical infrastructure of this massive AI revolution? Well, let's find out.
So here's the core mystery we're going to solve today, and it's a fascinating one. How exactly does a legacy industrial hardware manufacturer suddenly become the ultimate picks and shovels play for the AI gold rush? It's just this brilliant pivot, going from building basic electrical boxes to engineering the highly complex, hyper-intelligent energy networks that the world's most advanced data centers absolutely require.
So here's our quick roadmap for today. Number 1, record-breaking financials. 2, the AI data center boom. 3, what exactly is energy intelligence? 4, market outlook and risks. And 5, the final investment case. Let's get straight into it. Okay, Section 1, record-breaking financials. 21.2 billion euros in revenue. And that is in just 6 months. Just let that sink in for a second. That is roughly the GDP of a small country, generated in half a year. Delivering nearly 10% year-over-year top-line growth at this sheer, massive scale, it really proves they're capturing a totally disproportionate share of the global capital that's flooding into the energy transition right now.
And this perfectly illustrates the bottom-line impact. So while revenue grew nearly 10%, their core operating profit, that's their adjusted organic EBITA, surged a massive 22% to a record 4.1 billion euros, which pushed net income up 30%. Look, when your profits are growing literally 3 times faster than your revenue, your operational machine is incredibly optimized.
Moving on to Section 2, the AI data center boom. Now, the absolute crucial growth engine here is their energy management segment. We all know AI models require exponentially more compute power than traditional cloud operations, right? And that means truly staggering electricity and cooling demands. Schneider is basically laying down the complex energetic groundwork long before a single GPU even gets turned on. Just consider this dual-engine dynamic they have going. On one side, they are seeing absolute triple-digit growth in AI semiconductor demand. Insane, right? But what makes the company practically bulletproof is their baseline. They had an 11% Q2 recovery in their traditional industrial automation division. So it's this highly profitable, stable baseline, totally supercharged by unprecedented AI capital expenditures.
Which brings us to Section 3. What is energy intelligence?
We can define energy intelligence as this critical strategic evolution, moving from simple, reactive hardware to preemptive, totally autonomous facilities. See, they aren't just selling a breaker box or a cooling pipe anymore. No, they are selling a powerful software layer driven by AI. It's all about turning a passive physical facility into a living, breathing digital asset that optimizes its own power consumption automatically. I actually love this quote from CEO Olivier Blum because it hits the nail right on the head regarding this shift. He says, "Energy intelligence means your facility does not just tell you that something went wrong. It prevents the problem before it happens in real time and gives you the insight to act." Think about it. A power outage at a data center running a billion-dollar AI training model? That's catastrophic. By preventing failures entirely, Schneider elevates itself from just a vendor to a mission-critical partner. So we're essentially leaving behind the reactive monitoring of the past. That old model, it relied on hardware alerts, meaning you only knew something was broken after it broke, which of course meant costly downtime and hidden capacity loss. The future they are building is preemptive optimization. In a world where literally every watt of power is fiercely fought over, having software that optimizes energy flow in real time is pure gold. And here is exactly how Schneider is building this unique hardware-software stack. It's a 3-pronged approach. First, acquisitions. They brought in Cognite to leverage its Atlas AI layer for heavy industrial data fusion. Second, partnerships. Teaming up with Kraken to unlock energy grid flexibility at a massive scale. And third, organic innovation. They're actually combining internal tools, AVEVA and ETAP, to simulate next-gen data centers within NVIDIA's Omniverse, meaning they test a virtual 3D digital twin before a single brick is even laid in the real world.
All right, Section 4, market outlook and risks.
So the market is clearly eating this narrative up. Management signaled immense confidence by bumping their full-year organic growth guidance up to 13%. And Wall Street heavyweights like Bernstein and Goldman Sachs, they completely agree, setting strong buy ratings with price targets up to 350 euros. Why the hype? Well, because the market is finally properly valuing the high-margin software business that Schneider has successfully attached to its traditional hardware operations.
But hey, let's keep our feet on the ground and remain objective here.
Management is closely tracking 4 key risks. You've got foreign exchange headwinds from a weakening US dollar. There are ongoing tariffs and raw material inflation they haven't entirely offset yet. We also have to account for the sheer time it's going to take to fully turn around that industrial automation segment. But the biggest variable for sure, execution risk in the AI sector. If macro AI infrastructure spending unexpectedly cools down, their aggressive forward investments could briefly become a bit of a liability.
Finally, Section 5, the final investment case.
Let's pull all these threads together. You have a massive global leader with over 170,000 employees that is somehow still agile enough to capture the defining tech supercycle of our time. They are seamlessly blending hardware with visionary AI software, delivering record-breaking financials, all while maintaining a transparent, balanced grip on their risk profile. It is a highly, highly compelling execution story.
I want to leave you with this final thought for today's explainer. As the whole world marvels at new large language models and mind-blowing generative art, the most lucrative story out there might actually be the companies engineering the intelligent energy grids required to keep it all running. Because, let's face it, without the physical architecture, the AI revolution simply goes dark. So as you watch these AI software wars unfold, ask yourself, who actually owns the power switch? Thanks so much for joining me today, and keep your eyes on the builders.